Q&A, which there always tends to be, I'm happy to jump in there and answer any questions you may have. So to kick it off, and before I give a background about who I am or what we've been establishing over the last couple of weeks, I'm going to just start this off with a little question. So if I were to tell you that I can save you a minimum of $3,826, a minimum at worst case scenario, or even better, up to 43% in annual tax savings, would I capture your interest for the next 40 minutes? And I'm certainly hoping that the answer is yes, because for the next 40 minutes, we're going to talk about how getting this PREC in place for you as an agent is going to be beneficial to you, even if you take all the money out. And there's a lot of different advisors providing a lot of different information and different benchmarks. You have to have $400,000 or $300,000 worth of commission income. It's really all very irrelevant. And I'm going to share with you the actual numbers that you need to be focusing on versus some of those benchmarks that you've heard. So why is it important to understand a little bit about the personal real estate corporations and why it may benefit you? Ultimately, the goal of this structure and the why RICO, we've been advocating to RICO for years to get this structure set up for agents, is so that you can save tax money, because ultimately you guys have been in a position where up to 55% of your income has been taxed and been having to been paid to the government due to your income that you generated from real estate. And for so many other self-employed people who could use a corporate structure, they weren't paying those same tax rates, especially if they were working with someone like me, right? Making sure that we were optimizing lower tax rates. So the one thing that we need to understand is that there are massive tax savings opportunities by having a corporate structure set up. And tax savings money is real money. Sometimes, when we get in the rush of April 30th and tax season's upon us, the spring market is kicking off. April 30th, the payments are due. We don't have the cash inflow. We put it off and we wait. We file our taxes on June 15th, or maybe we don't because we're too busy selling real estate. There could be interest and penalties for late filing and whatnot. First off, that time of year does not work for you guys. We can actually use a corporate structure to change that all around as well. But just understanding that if we can save you $10, $15, $20, $100,000 in taxes, that is real money in your pocket. With the use of a personal real estate corporation, you will have more resources to purchase real estate. So one of the things is, and I'm going to get to this in a few minutes, along with examples, is that if you intend on buying real estate, which, we know the real estate market pretty well. You guys like to invest in real estate because you know, like, and trust it. And you get access to early opportunity to invest in real estate. If you're going to do that, a corporate structure will make sense, right? Guaranteed, if you're going to invest in buying future real estate that's not your principal residence, but for investment properties, the use of a personal real estate corporation will save you money. You'll have more resources to invest for retirement. So one of the benefits of setting up a personal real estate corp or a corporation in general is that any of the money that you're able to leave inside your business, and maybe that's your savings account, maybe that's your investments, anything that you can leave in there, we avoid that second tax, which is 43% on pulling that money out. We can avoid that, let our investments earn at a higher rate. We start off with a higher value, we accumulate wealth. If we use a corporate structure the way that it's intended, we can accumulate our wealth really quickly. You'll have more money if we can save you tax money by using a personal real estate corporation. You would have more money to invest in your brand recognition, in advertising, in lead gen. So if we can save you money, you can reinvest that back into your real estate business and really grow your market share, which is very exciting, especially for entrepreneurial minded people like real estate agents. You would have more money if we can take advantage of tax savings, which we should be able to. We would have more money to buy support staff. So if you're feeling like you're run around, but you just don't have the cash to hire the assistant, the use of a personal real estate corporation may find you the funds necessary to be able to hire that person, which ultimately could end up changing your life, working less, keeping more, and enjoying a little bit more of that life, maybe with your family in the summer or whatever it is. And lastly, the use of a personal real estate corporation can help us with personal and business cash flow. So the ability to use that corporate structure to make sure that we're monitoring and maintaining our cash flow, not only in our business, but that we're better utilizing our cash resources personally. That personal real estate corporation, once we get into how it works and when you would want to do it, it can afford us all of these benefits. So as a little bit of a background, who am I and why am I here? My name is Bob Gaurvreau, as I was introduced so generously. I'm the founding partner at Gaurvreau & Associates Chartered Professional Accountants. We serve the entrepreneurial market across Canada. In actual fact, just this past week, we were recognized as one of the fastest growing companies in the country on the Growth 2020 list. And we were the fastest growing CPA firm, or second fastest CPA firm in the entire country. Why do I say that? Because we're entrepreneurs working with entrepreneurs. We understand how the entrepreneurial market works. We understand what it takes to continue to grow, invest, and essentially generate more wealth inside our lives and the lives of our clients. That's why we've continued to have the success we've had. Just so you guys know, we have a specific focus. We don't work with government agencies. We don't do nonprofit audits. We work with the entrepreneurial market, specifically real estate agents, contractors, online businesses, and professionals. That is our sweet spot. Now, we can help everybody, but we have a large clientele across Canada and actually across North America in those markets that we serve. So we're really focused on that. This is our space. So I wanted to just give maybe a little bit more of a background for those of you that haven't seen or heard of us before. We've been recognized in all sorts of media outlets as the authority in this space. Breakfast television, Good Morning, Texas Business Insider, Global News. Even in our own space as a professional, we've been published in the Journal of Accountancy. Canadian Small Medium Enterprise had a great write-up on us on a leadership piece. Authority Magazine, Money Geek. We've been published in these areas because this is our space and this is our expertise, and those media outlets come to us as an authority in our space. I say that again just to give you confidence that this is exactly what we do, and we've made it our mission since the act has changed October 1st to make sure we're offering as much value to realtors as we possibly can, and to ensure that you guys are getting the right advice to get the right structure in place so that you can really save money and build your wealth going forward. And we're going to do it for you. That's the plan, right? So the first thing I want to kick off with is a bit of a background, right? So to understand whether personal real estate corporation makes sense to you, we want to understand the differences between business structures that we can have. So a sole proprietorship, that's what each and every one of you, unless you are a sub-broker, each and every one of you as an individual real estate agent were a registered sole proprietorship. Whether you realize it or not. So the sole proprietorship is an unincorporated business. That just means you've got revenue less expenses. You've got a net income that you're going to include and pay taxes on it, but it gets added on your personal tax return. So what that means is you've got marginal rates on a personal tax return that start at 0 and they go all the way up to 55%. So, depending on how much money you're making, your tax rate could be greater than or equal to 55% for any income over $200,000. That gets to be pretty expensive, especially when we compare it to the corporate option, which I'll get to in a second. A partnership is an agreement between two people to essentially operate a sole proprietorship with more than one person. So it means you've entered into an agreement that your two people or more people are combining their forces and are contributing to a business venture. And in exchange for your contribution, you are receiving a set amount of income. Typically, it's a 50-50 partnership. It could be 60-40, 70-30. It could be, specific to how the business is performing. However, whatever the result is, as a partnership, the individual partners have to claim that income again on their personal tax return. So it does show up there again at those 55% taxable income rates above $200,000. So partnerships and sole proprietorships ultimately are you as an individual and getting taxed at your marginal tax rate. Corporations, and this is the exciting piece, right? Prior to October 1st, unless we were using a sub-brokerage structure, we weren't, as real estate agents, able to utilize this structure. Corporations are a separate legal entity. So when we form a corporation of any sort, right, whether it's a personal real estate corporation, a holding company, we essentially file articles of incorporation that is the birth certificate for this new entity. So it doesn't exist until the date that it gets birth certificate. Once it gets this separate certificate, it has its own identity, it files its own tax returns, it has its own life outside of you as a shareholder. So it's completely different than the sole proprietorship and the partnership structure. This actual corporation files its taxes on its own and it lives its own life. Some of the benefits related to the corporate structure is that in Ontario, the corporate tax rate for the first $500,000 of net income is 12.2%, which is pretty extraordinary considering anything above 200 on the personal side is at 55%. So that same amount, you know, at 200 plus to 500,000 is at 12.2%. So that's 43% difference, right? Which is pretty substantial. And we can show you how you can optimize yourself and put that corporate tax rate in position. So really interesting how this works. You know, just as a little bit of a background, I know you guys are working in the Toronto market. Maybe many of you have more than $500,000 of net income. The interesting thing is we can continue to keep your tax rates really low. After you hit the 500 net, it goes up to 26%. But when you pull money out as a dividend to you as a shareholder down the road, it actually comes out at a lower tax rate for that income above 500. So there are ways to manage that if you are over 500. If you're over 500, definitely you need to incorporate, and we need to get you incorporated quickly. And I'm going to talk about pending deals and whatnot in a few minutes. But if you are at that tax rate, it is without a question that you need to get this in place. And no, it hasn't been fair. You know, real estate agents having to pay more tax than other business owners. But effective October 1st, the Trust in Real Estate Act 2020 allows realtors to incorporate and take advantage of that 12.2% in Ontario, which is very exciting. You know, I'm very excited for you guys. And see if this makes sense. And if it makes sense, let's get it in place so you can start saving as much as possible. So why or when would you incorporate? When would it make sense? So, and I alluded to this a little bit earlier. If you're paying more than 12.2% combined income tax and Canada Pension Plan contributions, you will save money by having a personal real estate corporation in place. So let me say that one more time. If your combined CPP and income tax payable on April 30th has been more than 12.2% of your taxable income, right? Your commission less your expenses is your taxable income for as you as a real estate agent, as a sole proprietor. If you're paying more than 12.2%, you will benefit from setting up a personal real estate corporation. And I will show you examples of how this works that are calculated, that are based on actual tax rates. So stay tuned for that. But if you are in this situation, setting up a personal real estate corporation will make sense. If you were to save money by using a personal real estate corporation, so let's say, for example, you were netting $100,000, which your effective tax rate would be about 30%, you know, about $30,000 on that 100 as a sole proprietor. If I could save you $18,000, would you be able to leave that savings inside your personal real estate corporation account? If you could, right? If you didn't need that extra money to live, then you will benefit from setting up a personal real estate corporation. That is pure savings that you wouldn't otherwise have. If you can leave it in there, you will benefit from a personal real estate corporation. If you currently, again, I'll use the $100,000 example. At $100,000 net income as a sole proprietor, you pay about $30,000. That's $70,000 of after-tax money that you would have as a sole proprietor. If at the end of the year you have savings left of that $70,000, you would benefit from being in a personal real estate corporation. I'll share with you why in a few minutes, but just know that if you still have surplus money left at the end of the year, you are going to benefit from setting up a personal real estate corporation. This is a big one. And again, knowing real estate agents, I know you guys love to invest in real estate. I do too, right? It's one of the greatest investment opportunities available, especially if you are into dealing with tenants or dealing with any sort of home maintenance. I personally don't like that. I have a property manager that deals with any of my investments. But if you are looking to invest in real estate in the future as an investment, you will benefit 100%. Guys, this is a big one. You will benefit from setting up a personal real estate corporation. I will show you how in a few minutes, but if you're planning on buying real estate as an investment, set up a personal real estate corporation. It will make sense for you in the future. Do you currently or in the future plan on building personal investments? So right now, if you're making RSP contributions, or if you're filling up your tax-free savings account, or if you have non-registered investments, you would benefit from setting up a personal real estate corporation because you are accumulating equity and investments outside of real estate in your personal name. We can actually do that inside the personal real estate corporation, and it will save you that 43% tax money. So there's lots of good opportunity there. So as you can see, there are a few things that if this applies to you, you should set it up. And I'm going to walk through some examples and some calculations of that, but I can guarantee you if any of those apply to you, you should be strongly considering setting up a personal real estate corporation. All right, hopefully this is big enough. If anybody's on their iPhone, I am going to walk through it, but these are some good examples. So before I even get into the first one thing I want to talk about is a lot of advisors talk about if you don't leave the money inside the corporation, there's no benefit to setting up a corporate structure. And the truth of the matter is that's not 100% accurate. So there is still some benefit related to it. There are costs to administer the personal real estate corporation that are outside of this calculation, which we'll talk about. But there are some benefits to setting up a corporation, even if you do take everything out, okay? Especially if we're looking at building for the future, it's good to get it in place now so that it's ready and available to us when we go to buy real estate, when we are making more money and are accumulating investments. So I'm gonna walk through the initial examples here. The initial examples are worst case scenario. Inside your personal real estate corporation, you pull every last dollar from your business account into your personal name, right? You want every dollar that you earn, you want to pull that out for personal use. You need it for your lifestyle, for paying expenses, whatever it is. If you pull every last dollar out, that is the worst case scenario for having a personal real estate corporation set up. These are the actual calculations related to it. So the very first column on the left, you'll see is a $50,000 net income real estate agent. Now in Toronto, that might be one sale a year, right? With how high the values have gone up. But this could essentially be, $100,000 of commission income, less $50,000 of expenses, leaves us with $50,000 of taxable income. The first column says proprietor. That's how you were prior to October 1st. Business income of $50,000. Your actual tax rate combined with Canada Pension Plan and income tax was 24.37%. The tax cost on that, including CPP, was $12,183. It would leave you with $37,817 remaining after tax and CPP contributions. Inside a corporation, $50,000 taxable income. As I said, there's a flat tax for the first $500,000 of net income at 12.2%. In here, $50,000 at 12.2, that's $6,100 of corporate income tax. That would leave you with $43,900 left inside the corporation to pull out personally. If you pull every last dollar out, your personal tax on that would be $2,257. And your after-tax money would be $41,643. As you can see, the tax rate is drastically lower, and you would have cash in your pocket of $3,826. This is a $50,000 net real estate agent, right? And this is the worst case scenario of you pulling every last dollar out. So this is, let's say your year end is August 31st. There's zero cash left in the business account on August 31st because you've pulled every last dollar out. That's what that looks like. If we move to $100,000, again, pull every single dollar out. $100,000 as a proprietor, Your tax rate is 28.75%. It would leave you with after-tax money of $71,253. Inside the corporate structure, $100,000 net income, tax rate is 12.2%. That's $12,200. It would leave you with $87,800 after tax inside your personal real estate corporation. You pull every last dollar out, it would be $12,747. You would be left with $75,053. You can see that there's a cash benefit to you of $3,800. Okay. 200,000, you can see it's starting to diminish a little bit. 2009-16 would be the benefit, and 300,000 would be 2,349. Now again, this is you as a real estate agent needing every last dollar for personal consumption, for your personal lifestyle. So not investing in real estate, not putting investments personally. This is just spending all of the money, every last dollar of it. And that is where it would put you. So when people say that there's actually a cost associated with this, there really isn't. You can put cash back in your pocket by having a personal real estate corporation set up, even if you spend every last dollar. Now, one of the questions that would come back for sure will be, well, Bob, if we have a personal real estate corporation, what does it cost to file the taxes on an annual basis, right? We know that it's more complicated. It's a more sophisticated tax filing system. The cost to file a personal real estate corp is going to be about $2,500. So even if that's the case, you still have cash in your pocket after you've paid for the new fee. There is no cost out of pocket to set up the personal real estate corp on an annual basis. We can actually put cash in your pocket. Again, worst case scenario is this. We're going to talk about better cases right now. When we deal with entrepreneurs, one of the things that we know is that there's a psychology of spending theory that's out there that says if you as an entrepreneur have money in your business account, you will spend it on business expenses or on personal items. You will take that, reinvest it inside the business. So the psychology of spending, this is I don't know if any of you have heard this, but this is a profit first methodology from Mike, I'm going to mess up his last name, but Mikulowicz. He talks about the psychology of spending and how you need to get money out of your business account or operating account into a savings account. So one of the things we do to simplify that, complicated profit first philosophy is we like to set up automated transfers from the entrepreneur's business bank account into an investment account. So in this case, if we were to take $100 a week, that's $14.25 a day. $100 a week would put you with $5,200 in a savings account at the end of the year. I feel pretty confident that everybody could do that. Let's just say we wanted to do that for us and our spouse. That would put $10,400 in a savings account every year. Now, the good news would be that that would essentially cover a tax-free savings account contribution on an annual basis, which is why I use that number. So if we set up a fixed transfer, $200 a week from your business account to a savings account, it goes away, it starts earning us money, and we are able to save that money instead of spending it. So as part of that philosophy and that theory, if we were to do this and set this up inside your business and you spent every other dollar outside of that $200 a week, this would be the outcome. So as the $50,000 net income real estate agent, your total tax would be $12,183, 24.37. We saw that same number before. Inside the corporation, that $50,000, you would pay that flat 12.2%, which is $6,100. Because you're leaving $10,400 inside the corporation in an investment account or whatever you want to put it in, as long as it's staying inside the corporation, you would only pay $792 on $33,700 in dividend income being pulled out to you. That would be a total tax of $6,892, which would leave you cash in your pocket of $5,291. Now, what we're going to see is that because this is a fixed amount, as we continue to go up in higher marginal tax rates for individuals, we continue to get larger savings. So the $100,000 situation, because we would only take $77,400 out, we would be paying we would have extra cash in our pocket of $6,948. At the $200,000 level, $7,392. And at $300,000, it starts to get clawed back a little bit, but it's $7,314. So we can see, even with a small amount of cash either left in your bank account at the end of the year or put into a forced savings investment opportunity of $10,400 a year, guys, it's not a substantial amount of money. You would be putting cash in your pocket. Now, this is where it gets exciting. Let's just say you wanted to invest in real estate. Now, I used a $50,000 deposit on real estate as an example, but it could really be whatever, you can use whatever example that you want to. If we get higher than 50,000, obviously these savings are going to be even greater. Now, what happens is, as a sole proprietor, and I'm going to use the $100,000 number because it's nice and round for me, so I don't have to do complicated calculations. So if we were using the $100,000 example, we pay that $28,747, and we have the remaining tax. Let's say it's $70,000 at the end of the day. Out of that $70,000, we then have to put that $50,000 deposit down. That only leaves us with $20,000 in our personal name left for personal consumption, for paying our bills, for whatever. So that tax that we have to pay, because even if we don't spend it, or even if we invested in real estate, we're still having to pay tax on that full $100,000 like it came right into our pocket, even though we've reinvested it. On the corporate side, if we take that $100,000 net, again, 12.2%, $12,200, we then leave $50,000 into an investment as a deposit on a new real estate purchase. That would mean that we'd have $37,800, which is more than the $20,000 that we would have remaining on the personal side to pull out. $37,800 we pull out personally, we pay $1,268. In this case, you would save $15,279. So if you're planning on investing in real estate, there's a massive opportunity to invest inside your personal real estate corp and save that sort of money every single time that you invest in a real estate property. As you can imagine, when our taxable income creeps up, what we're doing is we're actually saving more on the marginal tax rate that we would have to pay personally. So we get up to $200,000, same situation. We take the rest of the money out of the corporation at $125,600. We are able to save $23,584 in our pockets by investing in that real estate. And that's at a net 200 level. Net 300 level, the savings is $26,219. So I know this is one deposit. So you guys can imagine if it's two deposits where it's $100,000 a year, these numbers double. If it's three properties, it doubles again, right? Or it triples from the initial. And if your income is $500,000, it goes all the way up. It's going to essentially be the same savings as a percentage, which is going to be that 43% savings on that taxable income. So it's going to continue to grow. The more you're investing in real estate, the more you're going to be able to save inside your tax situation by using a personal real estate corporation. So the results of this, and I feel like these examples really portray the vast different experiences that everybody has, right? Whether you start out with a $50,000 net or you're 300 plus, whether you're saving money in there or you're taking every last dollar out, whether you're investing in real estate inside your personal real estate corp or you're not. It shows you a balance of everything. And if you get above that $300,000 limit, obviously it's going to make more and more sense. The higher your income goes, the more sense it's going to continue to make to set up your personal real estate corporation. So at a minimum, as we saw, the $50,000 amount, if you took every single dollar out, we would still be able to put $3,826 in your pocket related to setting up a personal real estate corporation. The more you leave in the corporation, whether it's for real estate, whether it's cash in the bank, whether it's investments like stocks, bonds, nobody's buying bonds anymore, stocks, mutual funds, whatever it is, foreign currency, whatever it is that you want to leave inside that corporation, that's where you're going to be able to save that 43% tax or avoid paying that 43% tax and let that investment continue to accumulate and grow. So utilizing this structure, you can save up to the 43% in annual tax costs, which is super exciting, right? And again, a new opportunity for you guys effective October 1st. So if any of the considerations discussed apply to you, again, the considerations, are you paying more than 12.2% in combined personal income and CPP contributions? If the answer is yes, a personal real estate corporation would be beneficial. if you would be able to save tax money and leave those savings inside your corporation, essentially meaning that you're no worse off personally, but now you've got savings in your corporate account, then setting up a personal real estate corporation would make sense. If you're looking at creating investments or building other sort of wealth, whether it's in real estate, stocks, mutual funds, foreign currency transactions, any sort of investment, maybe in another small business, you will benefit from setting up a personal real estate corporation. So if those apply, you should really look at getting this set up and probably getting it set up sooner than later. All right, Bob, so this sounds great. You've got me. One of those situations applies. What do we do now? So as a real estate, you can create that personal real estate corporation. I feel like I've been pretty clear on that. So effective October 1st, in accordance with the Trust and Real Estate Act, you would be able to file this if you were to want to file these articles of incorporation on your own. And I'm going to, in the next 30 seconds, discourage you from doing this for a few reasons, okay? This is where it gets complicated. For you to file your own articles of incorporation is like watching someone trying to sell their own home. You know that they're missing value, right? You know that they're not getting the market out there. They're not getting as many eyes on their property. They're not going to get as much for the sale of their property as you guys would, right? That's the same as working with qualified advisors. So make sure that you're incorporating your accountant and your lawyer into these discussions to make sure that you're really optimizing the tax benefit and the future wealth accumulation benefits that sit inside this structure. And this is how I'm going to discourage you from doing it. So inside the articles of incorporation, if you were to file it for yourself, you need to file them in accordance with the Trust and Real Estate Act 2020. You also need to know the initial directors of the corporation. That's pretty simple. It's probably you. You also need to know the restrictions on business activities as provided within the Act. You also need to understand the different types of share classes that you need to have in place, the share definitions, the dividend policies, whether or not they're redeemable or retractable, whether they have rights, what restrictions they have on it, all in accordance with the Business Corporations Act of Ontario and following the Business Corporations Act of Canada. I say this to say, listen, it gets a little bit complicated. What we need to know is that we need to do it right out of the gates. If we don't do it right, we're going to have to redo it. If we have to redo it, it could get complicated. If there's new value inside the company and we have to change share classes to make sure income splitting opportunities are maximized, we could be dealing with valuations and tax liabilities. Let's get it right the first time. If we get it right the first time, we can save tax, we can accumulate that real estate, we can accumulate wealth. But if you do it wrong, it's going to cost you, and likely it's going to cost you much more than it would right out of the gates. So the moral of the story is, let's set it up properly so that you can, right out of the gates, start saving that tax money. So here's some good news that we have for you guys. And I was just sharing earlier before you guys all jumped on the call, we have set up over 50 personal real estate corporations in the last 10 days. So our team's been really busy making sure that realtors are getting positioned in a great way to have the right structure in place to make sure any of their pending deals are getting into the personal real estate corporation. And maybe before I get into the more good news, let's just talk about that for a minute. So we've actually had a lot of discussions, especially with your particular brokerage, about pending deals. So here, there's two situations that are happening. Tim Hudak came out in his presentation about 10 days ago and said there's a concern about pending deals and whether or not those pending deals can be put inside the personal real estate corporation, or it has to be any deals that have been written after the date that the incorporation is in place. So they said there was going to be a little bit more guidelines and guidance provided. I'm not sure when that guidance is going to be provided, guys, and this is a bit of the concern. And one of the discussions we've had is, when do we get absolute clarity on whether or not we can close pending deals inside the personal real estate corporation, or it has to be new deals? And the reality is it's going to come out in tax court in about 3 years about what it is that we were supposed to do. So what we want to do is get ahead of that. So if we have our personal real estate corporation set up now, we've already talked with the team at Royal LePage, and what they want to do is help you get those pending deals inside the corporate structure. And what that means is As soon as your personal real estate corporation is in place, we're going to be assigning those deals inside the personal real estate corporation, meaning that you're going to save tax on any deals that haven't closed. So there's two things that we talked about with Royal LePage on this. The first was, what if they come back and say, yeah, you're not going to be able to do that. Worst case scenario, we pay the personal tax like we would have before, but we have an even better solution for you. So, and it might be a little bit more complicated, but if it were to come to that where they say, you know what, you can't close these pending deals that way, we actually have a workaround for it. So we are able to, and this is where it's going to get complicated, so I'm going to keep it as high level as I can. We can actually file under Section 85 of the Income Tax Act. Nobody go reading this tonight. It's not good reading. But under Section 85 of the Income Tax Act, we can actually roll assets that are held personally into a corporation without creating any tax consequences. So what that means to you is any of the rights associated with your pending deals, we can roll into the corporation without triggering any tax consequences. The deal can close inside the corporation, even though it was a personal asset, and you can still make sure that you deal with the 12.2% versus the possibly 55%. So even if they come back and say, it's not going to work, we're not providing that guidance, our team can still go do an extra step and make sure that you guys can close these deals. So I want you to know that because a lot of advisors out there, again, are misspeaking when it comes to this, saying, it can't happen, it won't work. And those are the advisors who always follow the rules to say, these are the rules that are going to prevent us from getting our clients what we want. We go the other way and we say, how can we get clients the results they want using the rules that are in place? And this is a workaround for us following the Income Tax Act that's going to allow us to get you the outcome you're looking for. So that's just a little side note on pending deals, but very exciting from our end. Everyone will be able to get those pending deals inside a corporate tax rate, regardless of what Tim Hudak comes back and says with his guidance. So if you are ready and if it makes sense to get this corporation in place, let's do it. We can actually do it for you. And we've spoke with your team. And again, we did more than 50 of these last week. We are working with a team called LLF Lawyers. They're the largest law firm in Eastern Ontario. They are working with us. They are doing the actual filing for us. We are coming up with an individual tax plan to make sure that all income splitting opportunities and all future tax benefits are being incorporated in this structure. We then pass it off to them. They do the filing for us. We're getting these done within 2 to 5 business days right now. If you sign up for the service and you're excited about getting started, we can do that for you. The link is right there. It's gauvreaucpa.ca/real estate-incorporation. It's a form that gets filled out. There's a few questions that we have that will personalize the corporation to you. And what has been happening is our tax manager, Tyler Powers, when we get this form, he's been reaching out and having a discussion about what these things mean and making sure that it's getting personalized in the right way. Once you get signed up, our team, again, will reach out. Tyler will reach out. We'll obtain everything we need to make sure your tax plan is in place. We'll get the law firm to file these appropriately for us, and then you guys are off to the races. Here's another thing that I know about realtors, and I love working with you guys, right? I've made a career around specializing in working with real estate agents and other entrepreneurial spaces. You guys are actively involved in selling real estate, getting listings, showing deals, maybe showing too many properties too often and it gets frustrating. But what you don't necessarily have time for is dealing with your bookkeeping. Now, I say that because when we come to April 30th and all our realtors are getting excited about the spring market, you go, well, we don't really have our shoebox full of receipts ready, which is also not great if it's in a shoebox. But, we deal with it all the time. Then we get to the June 15th deadline, and it's maybe June 13th or 14th is probably when we hear from more realtors than ever throughout the year. And we get everything done and filed on time and whatnot, but there's still a bunch of realtors that we work with that don't bring their stuff in until after. And there's fines and penalties related to late filing and yada, yada, yada. One of the things about incorporating is that we can actually pick a different year-end date. So as of right now, if you guys want to sign up your corporation, we can actually create it probably effective for November 1st. And your first year, all of your deals that will close up to October 31st, you would pay tax on. So instead of it being, 2020 or 2021, we can do it all the way to the end of October or September or August, whatever you want, up to 365 days from the date you incorporate. What this does is it allows us to file these taxes after the summer market has come in. You've got your pending deals that are coming in, they're closing, your cash flow is good. That's when we can deal with the tax liability versus being in the spring. You're just getting active in the market. You've probably spent your money on advertising or personal consumption, Christmas, whatever it is that you spent the money on. Spring is not necessarily the time that we want to be dealing with taxes. So we can push that to the fall. If you were to set up October 31st as your year-end date, you wouldn't actually have to pay your corporate taxes until January 31st, 2022. So there's a big deferral opportunity, not only for pending deals, but for the next entire year as well. So back to my bookkeeping. I know you guys don't like doing it, and I don't blame you, right? One of the things that we've done is we've set up a streamlined approach for realtors inside a personal real estate corp. When you set up your personal real estate corp, you're gonna have to go get a new business bank account set up. You go get that business bank account by providing your articles of incorporation. Once you have your articles of incorporation in your business bank account, you then provide both of those documents to the brokerage, and they will help get you set up with your very simple agreement that you need to file. And we were actually talking about that earlier as well. The agreements in your brokerage are going to be ready to be signed next week. So that's super exciting, so that, the brokerage has done a really good job here for you guys, because I know a lot of the brokerages are behind in getting these ready. Yours is ready to go because they've been working and advocating for you very, very strongly. So back to my bookkeeping. For $200 a month, we would get you to set up a business bank account, and we would get a credit card that you use for any of your real estate purchases. We would get online access to those two things. We would do all of your bookkeeping for the year for you. One, you would know exactly what goes on and how your business is performing at all moments of the year. We can send you monthly reports. And two, you don't have to worry about any of the administrative component. When we get to your October 31st year end, we'll have everything we need to get your corporate taxes filed without any headache for you guys. All we have to do is make sure that we have the funds to pay any of that 12.2% corporate tax. So by working with a team like ours, you would have accurate records, up-to-date numbers, no more late filings, ongoing guidance, time to focus on making sales, more time enjoying life. And you're backed by a team that focuses on this industry. So we know this space really, really well. We've set it up so that if it's a business bank account and a credit card that's designated for your real estate, personal real estate corp, we're starting these bookkeeping at $200 a month. So when we first came out and said $3,826 in your pocket, if you wanted to off all of your bookkeeping responsibilities, that's $2,400 for the year. You still got cash in your pocket by setting up your personal real estate corp. Okay, so what is it that you need to do now to make sure that these get in place? So if you want to work with our team, fill out the application. Our team will reach out. We'll make sure that we get the personalized tax plan, and you're set up and ready to go within 2 to 5 business days. If you don't want to work with us because you've already got advisors that you're comfortable with, make sure you reach out to them and make sure that you're getting the guidance you need. We've arranged it so that with us and LLF, so a CPA firm that works with realtors and a legal team that works with setting up personal real estate corporations, we've got that fixed fee to get this set up of $2,000 plus HST. So typically the incorporation is about $2,500 plus. If you're getting a personalized tax plan, that's at least another $1,000, $3,500. I've got my team at LLF Lawyers who's working closely with us. I got them to do this for a really good price so that we can make sure that you guys get that in place as quickly and as efficiently and as cost effective as possible. What you have to do once you, again, get that articles of incorporation filed, which has been within 2 to 5 business days, you need to go set up a business bank account. You need to set up that designated credit card because it makes your bookkeeping that much more simplified. It makes your life more simplified. Once you get that in place, again, you're going to have to go back to the brokerage. You're going to have to sign the agreement that essentially says, I, realtor, am acting as an agent, and my personal real estate corporation is going to be the beneficiary that is going to earn the commission real estate income from the service I provide the brokerage. That's all the agreement says. You also need to send a letter or a note to Rico that says, hey, I'm setting up a personal real estate corp. Here it is. I'm now going to be earning my commission income through that personal real estate corp. And Royal LePage is going to ask you, can you please send us confirmation that you sent this letter? Can you give us articles of incorporation and the new bank account that you want us to deposit the commissions into? And then that's it. It's not a sophisticated or complicated system as long as it's done right. So once you get those things set up, we take it from there. And earlier we were chatting and I had said to Royal LePage, typically we probably get, about 20% of the people who are watching. You guys might be higher because you're in Toronto and your commission income may be a little bit higher based on the property values. We normally get about 20% of people who are on the webinar to sign up and get the corporations in place. What I would say is if you sign up and you're obviously part of Royal LePage, what we're going to do is we're going to set up a follow-up appointment that says, okay, you've got all these things in place. Now let's start planning out how we optimize this structure. We plan on working very closely with Royal LePage in the future to make sure that you guys are getting as much value as possible out of your advisors. So hopefully that makes sense. Again, if you're paying more than 12.2% tax, you should look at a personal real estate corp. If you're looking at investing in real estate, you should consider strongly a personal real estate corp. If you can save money or the taxes that we can save you, you can leave inside your business to grow your wealth, you should consider it. There's lots of really great opportunities to get this in place, and we're happy to help. Ultimately, let's save tax, accumulate real estate, accumulate investments, hopefully work less, keep more money, and start living a better life starting now. Hopefully that makes sense. I see in the chat, I haven't looked in there yet, but I see that there's a bunch of questions. So I would love to start answering those if that makes sense.
Yeah, I've got you, Bob. Thank you so much for that incredibly informative 50 minutes of mind-blowing information. It's certainly got a lot of people thinking, and I've got a ton of questions that I want to run by you. We may not get a chance to answer them all in the interest of time, but thank you for providing your contact information for people to reach out to you if we're unable to answer your questions during this session. But let's see how many of them we can get through anyway. Earlier on in the chat, somebody asked, if a realtor has an existing personal corporation in another business, can they turn that into a PREC, or can they add the PREC into that existing corporation?
Yeah, the short answer is yes. It would depend on how that corporation was set up. Again, with the PREC, there are restrictions, not many, that need to be in place. We would also want to make sure that the share structure is appropriate. With the PREC, the only common share ownership can be with the registered agent. So even if we have, a husband-wife team, which seems to happen often, you need a PREC for each spouse in there if that spouse is a registered agent who's going to be signing deals, right? If you only want to have one spouse sign the deals, sure, that spouse can be a common shareholder and the other spouse can be a preferred shareholder, which means we can do income splitting. But if you have two spouses, chances are you need to set up individualized PRECs. So back to the question, you can if it makes sense, but we would definitely want to look at the structure and see if it's appropriate to follow the PREC guidelines.
Thank you. And that was another question, was if a married couple who are both registrants can have one PREC between the two of them. And you answered that by saying it's possible, but you need to do some investigation into how your business and team is set up in order for that to be feasible, correct?
That's right. And ultimately, it would mean that all deals would go through one of the spouses, because the PREC really is an individual agent contract that says between the brokerage and the agent that the PREC is going to be the beneficiary of those commissions. So if it's two individuals, you can't have that under one PREC. You have to have your own separate one, which may have a lot of benefits. So if you're a husband-wife team, and I'm going to expand on this because I think it's valuable for many. If you're a husband-wife team and you both own your individual personal real estate corporation, you can both get access to $500,000 at that 12.2 rate, which now means as a household, you can get $1 million of income at 12.2% corporate tax rate. So there could be some really great income tax planning opportunities by setting that up separately as well.
Beautiful, thank you. And just to confirm, you had estimated that creation at its base cost or its average cost is around $3,500?
That's my thought. Typically, when we send incorporation letters of instruction over to a lawyer, they typically charge somewhere between 25 and 3,500. And then, when we do a tax plan to make sure it's right, we usually charge $1,000, which would be 4,500. We've got it where if you fill out the form here and work with us, we'll do it for 2,000, and that's the incorporation with the law firm as well.
Okay, I've got a two-part question and then another question, and then we'll cut it off there and we'll encourage everybody else to come to you directly with their questions. The next one is, can one transfer existing investments, assets, real estate into the newly formed PREC? Like, for example, if I had a stock investment or if I had an investment property that was currently rented, could I transfer those into the PREC, and can I transfer title of the real estate as well?
The answer is yes. It sometimes gets complicated, and we'd have to certainly look at each situation. But let's talk specifically about real estate, because I think that would apply to most people. Yes, you can, if you have investments that are mutual fund stocks, whatever, you can transfer it in at the original cost base, and you can actually take a shareholder loan back for the original cost of those investments tax-free. So for example, if you have $100,000 of non-registered investments personally, transfer those into the corporation, you can actually take $100,000 of commission income out of the PREC without paying any personal tax on it. The real estate side, this is where I think it may apply to more people. So if you have a real estate property that you maybe bought for $800,000 is now worth $1 million, for example, if we transfer that into the corporation, we can do so, again, under a Section 85 rollover election, which don't go reading that, but we can do it without triggering capital gains tax on the transfer of the property. You could then pull back a shareholder loan for $800,000, meaning that as the PREC earns the next $800,000 of net income, you can pull that out tax-free. The PREC now owns the real estate. Now, the only downside of transferring this in is that it will trigger land transfer tax. And there's no way we can get around that, even though the beneficial ownership of the PREC and you as an individual are the same, we still can't get around it. So incorporating the land transfer tax would be a cost of doing so. Many times it still makes sense to do it. So that would be a discussion you need to have with your advisors.
Perfect. And also really good ratification that what's good for the goose doesn't necessarily apply to the entire gander. And everybody that is thinking of doing this is going to need to run their own individual numbers, because what's going to work for some isn't going to work for other people, correct?
That's correct.
Okay, so two more questions I think that I want to ask. Somebody has been messaging me privately with a really good question. They have heard from another webinar that we effectively need to sell our existing real estate business into the PREC. Can you talk a little bit about the nuances surrounding that statement?
Yeah, so what happens when you go from an unincorporated sole proprietorship into a corporation? What we're supposed to do is put a valuation on the business. Now, what our plan has been with that is that a real estate agent business, and with all respect, I say this, is not really transferable to another individual, which means the value of that real estate business is zero to anyone other than the agent. Now, if you want to argue differently to me that you can transfer your agency interest to someone else, and maybe it's selling your existing clientele if you've got a lot of clients that continuously buy from you, maybe there's more value there. So the answer is yes, you're right. We are supposed to transfer it. Our intention is to put in the value of $1 as a transfer of that ownership in, with an election clause that says if the CRA were to come back and challenge the value, that we're open to that interpretation. Likely it's never going to happen, but that's how we would deal with that. So it is true. We do need to sell our incorporated business value in, and part of that might be those pending deals, right? So if you have pending deals that are $200,000, we would sell those at cost base into the corporation. The corporation would pay the 12.2% tax, and you would essentially have a share value of that $100,000 or $200,000 as an initial investment into the corporation. So it gets complicated. The answer is yes, but it shouldn't be anything more than a nominal amount that gets transferred in there.
Beautiful. And I have two more questions and then we're done. We're going to cut it off. I want to get to everybody's questions and it's hard when they
Sure.
keep coming in. So two more and
Yeah.
then we'll cut it off. Okay. So one of the second last question is, if you were a realtor and your spouse is working for you, but they're not registered, can the PREC owner provide the employee, the spouse employee, with dividends at the end of the year? And does she have to be named in the PREC in order to receive those dividends?
So we don't have to name her in the PREC or him in the PREC as a share owner. So when we create the corporation, what we have to do is have the appropriate share classes in place. We don't actually identify who the owner is of the corporation. That comes in from the lawyers. They do up resolutions and they say, this is who we're offering shares to. And then they do a share register and whatnot. But when we create it, we just need to make sure that we have the flexibility in the share characteristics to add someone like that. So really great question. A few years ago, the Liberal government, when they came in, they changed income splitting rules and essentially said you can no longer split income with family members, with a list of rules that say if you actually achieve this, then you can. Now, one of them would be income splitting with a spouse who works more than 20 hours per week inside the business. And I would argue that many of you, if your spouse is working with you at all or to any degree, that we could have them justify a 20-hour per week contribution to the business. If that's the case, then we can have them as a special shareholder. We can provide them dividends. And that dividend amount can actually be split 50-50. There's no reasonableness test on a dividend amount. So we can do some really effective income splitting that way. The other thing that I will say is even if your spouse isn't in your real estate business, we may still want to set them up as a shareholder. Now, the reason being is that as part of those income splitting rules with family members, once you turn 65, you can actually income split with family members. Those tax on specified income rules go out the window. So once you're 65, if you have $1 million of real estate or investments inside your PREC, you can actually start splitting that income out with your spouse once you hit that milestone.
Beautiful. So the answer that I'm hearing basically to all of your very well informed questions is, it depends, call me, is really what I'm hearing you say.
To a certain extent, but know that yes, like the answer is yes, we can do that. We just want to make sure it's done properly. But yes, absolutely, that's an option that's on the table.
Okay, perfect. And the last question before we cut it off is, any existing loans or mortgages or liens or other encumbrances on any of the investments that are moving into the PREC, are they affected in any way?
So if we're talking about, mutual fund stocks and it's an investment loan, the security of that investment loan is likely the investments. So we would have to look at that on an individualized basis. Now, if you've already got this loan in place and it's in your personal name, we likely can get the bank to transfer the ownership of the debt into the corporation as well. The same would go for any sort of refinancing. We obviously wouldn't want to incur any penalties, but maybe, if we are at a refinancing point next year in September, for example, we wait until then to look at transferring that property in.
Okay, perfect. Well, that concludes the questions that we've got, Bob. I can't thank you enough for the hour that you've just spent overloading us with really valuable information. You've certainly proved that you absolutely know what you're doing in this field. And I would strongly encourage anybody to give you a call if they're interested in figuring out if a PREC is right for them moving forwards. Anybody that has any outstanding questions, please feel free to contact Bob's firm directly. And obviously, he is more than happy to help you answer all of your questions and see if this is the right move for you. And if it's not, maybe he's able to find another path for you to follow that will be beneficial for you in your real estate business. Bob, any closing words?
No, again, I think this is really exciting times for real estate agents. Obviously this has been an opportunity we've all been looking for many years. It's really amazing that you guys have a really supportive brokerage who wants to work with you and get you set up in the best position possible. So it's very, very exciting. Let's look at doing it sooner than later. If you have no pending deals and it doesn't make sense, just keep in mind that if we set it up now, you can throw your whole next year's spring and summer closings into the corporation if it gets set up now. But let's look at, if it makes sense, let's get it set up. Let's start saving, and let's start moving all of you towards accumulating wealth at a much quicker pace. So thank you for having me this morning. It's been an absolute pleasure. I look forward to working with many of you in the future.
Thank you so much, Bob. Much appreciated. Thank you to everybody on the call this morning that joined us. Much appreciated, and have a successful Q4. Thank you, everybody.